Following the journalization and posting phases of the accounting cycle, a procedural verification is required before the preparation of the final financial statements. This critical step is the compilation of the trial balance. It is not a formal financial statement, but an internal schedule that aggregates the closing balances of all general ledger accounts. Its primary function is to serve as a proof of the mathematical equilibrium of the ledger, confirming that the total of all debit balances equals the total of all credit balances. This session will provide a technical examination of the trial balance's objectives, its inherent limitations as a diagnostic tool, and the methodologies for rectifying the various classifications of accounting errors. The objectives of the trial balance are procedural and preparational. Its foremost objective is the verification of the arithmetical accuracy of the posting process. The congruence of its debit and credit column totals substantiates the adherence to the dual entry system. Secondly, it serves as the foundation for the preparation of financial statements. It acts as a consolidated worksheet, segregating nominal account balances, which form the basis of the statement of profit and loss, from the real and personal account balances, which constitute the elements of the statement of financial position. Furthermore, it functions as a primary mechanism for error detection. A disagreement in the trial balance totals provides definitive evidence of a one-sided error, mandating an investigation. From an audit perspective, the trial balance is the initial document upon which many substantive procedures are based. Its agreement provides a preliminary level of assurance regarding the integrity of the client's general ledger system. Accounting errors can be classified based on their impact on the trial balance's equilibrium. Errors affecting the trial balance are unilateral or one-sided errors that cause a discrepancy in the totals. These include errors of casting, which are summation errors in subsidiary books or ledger accounts, errors of balancing, and errors of partial omission, where only one aspect of a journal entry is posted, directly violating the dual entry principle. A potent example of a one-sided error is posting to the wrong side of an account. Consider a rent payment of Rs5,000, which requires a debit to the rent account. If this amount is erroneously posted to the credit side of the rent account, it creates a composite effect on the trial balance difference. The debit total will be understated by Rs5,000, and the credit total will be overstated by Rs5,000, resulting in a total discrepancy of Rs10,000 between the columns. More insidious are the errors not affecting the trial balance. These are two-sided errors that are conceptually incorrect but maintain the mathematical equilibrium of the ledger, thus bypassing the trial balance's primary check. An error of complete omission, where a transaction is entirely excluded from the books of original entry, is a prime example. Similarly, an error of duplication, where a transaction is journalized and posted twice, will not be detected by the trial balance. An error of commission involves a correct amount being posted to an incorrect account within the same class. For instance, a credit sale to Ravi Kumar is posted to Raju Kumar. The general ledger control account for sundry debtors will be correct, but the subsidiary debtor's ledger will be inaccurate. The most significant silent error is the error of principle. This represents a fundamental violation of accounting theory, typically the incorrect classification between capital and revenue expenditure. For example, capitalizing minor routine repairs as an asset instead of expensing them, thereby violating the matching principle and overstating both assets and profits. From an analyst's or auditor's perspective, the detection of these silent faults is paramount. An error of principle directly impacts key financial ratios. Incorrectly capitalizing a revenue expense will inflate asset figures, distorting return on assets, ROA, and will understate expenses, inflating net profit margins and earnings per share, EPS. Substantive testing is required to uncover these errors. To detect an error of principle, an auditor would examine the repairs and maintenance ledger for large, unusual amounts and vouch them to source documents to assess their nature. To detect an error of commission, a sample of customer accounts receivable balances would be confirmed directly with the customers. The correction of identified errors is termed rectification, The methodology is contingent upon the stage of discovery. If an error is located prior to the preparation of the trial balance, a direct correction in the affected ledger account is permissible. However, post-preparation of the trial balance, a formal rectification journal entry must be passed through the journal proper. This ensures a complete and transparent audit trail of the correction. To illustrate, let's rectify an error of principle. Suppose Rs 20,000 paid for the installation of new machinery was erroneously debited to the wages account. The incorrect entry debited wages and credited cash. The rectification entry is machinery account, debit, Rs 20,000, to wages account, credit, Rs 20,000. This correctly capitalizes the cost and reverses the incorrect charge against income. In instances where the trial balance totals disagree and the source of the discrepancy is not immediately ascertainable, a suspense account is employed. This is a temporary control account used to hold the discrepancy in abeyance, thereby facilitating the balancing of the general ledger for the purpose of preparing draft financial statements. Assume the trial balance debit total is Rs 5, 50,000, and the credit total is Rs 5, 48,000, resulting in a debit excess of Rs 2,000. Upon subsequent investigation, it is discovered that the sales book was undercast by Rs 2,000. The rectification entry is suspense account, debit, Rs 2,000, to sales account, credit, Rs 2,000. Upon posting this entry, the sales account is corrected and the suspense account balance becomes nil, thus closing it. In conclusion, the trial balance is an essential procedural control within the accounting information system. Its ability to verify the arithmetical equilibrium of the ledger is its primary, though limited, function. The systematic process of rectification, including the disciplined use and subsequent clearance of a suspense account, is critical to ensuring that financial statements are presented fairly and in accordance with the applicable financial reporting framework.